and paste the signals that you are receiving effectively. Okay, so we want to cover all the key points and all the information for you guys to be able to understand exactly how you can cover the key points and copy and paste the trades really, really effectively. Okay, we want you guys to understand exactly what the updates mean, how they apply to you, and how you guys can best take advantage of them. Okay, so first things first, I'm going to share the screen and I'm going to take you guys straight into TradingView. Now, on Friday, we saw something that has never been seen before in the Forex market, and that was the markets closing for 3 hours during the London session. Okay, it's something that we never have seen before. It's something that we have never seen again. It happened because the world's largest provider of data into the Forex market, CME, had a data outage. Okay, and this meant that price was not being reported correctly to brokers, and many brokers took the decision to suspend trading in order to protect clients. Okay, so let's go straight into some key points. Okay, now when a trade is sent, it is sent like this. This is the first thing that you will see. Okay, it will say XAU USD, buy or sell now. Okay, so this was the last signal of the day that was sent on Friday. Now, this is going to come with the entry price where we have entered the trade. Okay, so in this example, 4180.5, okay, which is this black line here. Okay, now typically we are going to give a $3 or $4 range to enter that trade. Okay, before I continue, let me just make sure that I am recording this call. Bear with me. Record.
Recording in progress.
Okay, perfect. So typically every single trade will have a $3 or $4 range that will appear like this. Okay, so we will send the entry that we got after we said buy now. Okay, you are then going to see TP1, TP2, TP3, TP4, and TP5. Okay, now you're also going to see a stop loss, which is typically 80 pips, which is also $8. Okay, now 9 times out of 10, TP1 is going to be 30 pips. So in this scenario, 4183.5, TP2 is typically going to be a further 20 pips. So in this scenario, 4185.5. Take profit 3 is going to be 4187.5. Take profit 4 is going to be 4189.5. And take profit 5 in this scenario was 4199, okay, which was a further 100 pips from TP4. Now, what I want to teach every single person on this call is how you can copy and paste this trade effectively, okay? But I also want to talk about the different approaches that can be taken, because not every single person is going to take the same approach. It is going to largely depend on yourself. It is going to depend on your risk appetite, okay? Remember that we are trading Forex, and furthermore, we are trading gold. This is the most volatile asset in the trading world, okay? It's the currency pair, the commodity that moves the most, okay? It provides the most opportunities, but it's also high risk, okay? This is not an ISA or a savings account. We are in the financial market, and we are in extremely volatile economic times, okay? We're seeing things that we've never seen before, all-time highs, the market closing for 3 hours without any notice. We're seeing President Trump tweet whenever he feels like it, which is creating huge volatility inside the Forex market, okay? So I'm going to give all of you different approaches based on your own risk appetite, and also the ability of what you have to put into this in terms of your time, okay? Because the time that you put into this and the time you have available is, of course, going to determine your results. Just like anything, the more you do something, the more experienced you become, the better your results will be, okay? So let's also take a look at some of the statistics, okay? Because this will put things into context. Now, in the month of November, okay? In the month of November, these were the results. Let me just quickly find them in the Telegram channel. We sent 147 trades, okay? We had 156 winning trades. We had 18 trades hit stop loss, okay? So that is a win rate of 90%. So what I want to do is break down the first approach that you guys can take. Now, in this scenario, there will, of course, be a number of trades, okay, where break even played a part, okay? And again, I'm going to discuss that based on every single individual, okay? And I'm going to talk about why we actually use stop loss to break even, and again, how you can manage that depending on yourself, okay? Now, if we break this down further, okay, 147 trades, okay? Now, our statistics and our analysis show that 85% of our winning trades are going to TP1, okay? So in this scenario, that means that 147, or if you round it up, 148 trades hit TP1, with the remaining hitting break even, okay? So 148 times by 25 or 30 pips, okay? Let's just call it 25 for the sake of argument, because we understand that sometimes the market is moving extremely fast. So 148 times 25 is 3,700 pips, okay? So 3,700 pips. That's just going off of TP1, okay? That's not talking about TP2, TP3, TP4, or TP5. That is just going off of TP1. So let me just highlight that to make it clear. Now, we also had 18 trades that hit a stop loss of 80 pips, okay? So 18 times 80 pips of loss, okay? So if we calculate that, that is 1,440 losing pips. So if we do the maths, 3,700 times 1,000 minus 1,440 is 2,260 pips if you only went for TP1, okay? If you only went for TP1. Now, if you went to a hedge fund or a professional fund management and you said to them that I can give you 2,260 pips in a month, they would snap your hand off, okay? They would be extreme. 2,260 pips in 1 month. Now, why do I highlight TP1? Now, if you are new, if you have less experience and you have limited time, now here is option number 1 of how to approach these trades. 1 entry, you set TP1, you set stop loss, and you then set and forget. Okay, very simple. 1 entry, you set TP1 and you set stop loss. You then set and forget, which means you leave it. Let it either hit TP1 or let it hit stop loss. Why? Because the statistics show that if you do this for every single trade, you will be profitable. Okay, someone in the chat box mentioned risk to reward ratio. Let me tell you guys now, risk to reward ratio is meaningless Okay, all that matters is how much money you make when all is said and done. Okay, that is the reality of trading, the profit and loss. And the numbers do not lie. The numbers clearly show that if you just followed TP1 in the month of November, then you have made 2,260 pips of profit. Okay. Now, if you did a 0.1, okay, which is £1 per lot, you would have made £2,260. Would anyone be upset, annoyed, or negative with an additional £2,260 a month by simply setting and forgetting? This is only going for take profit one. Now, I must make something extremely clear to everyone. There are pros and there are cons of every single approach. Nothing is perfect. Okay, the pro here is that you can set and forget. It is very simple and it requires minimal intervention. Okay, you don't have to manage anything. You set and forget. The cons are that you will never experience TP2, TP3, TP4, or TP5, but you will still make money. Okay, understand that there is no perfect solution. That is life, especially in trading. You have to decide out of these options, which is better for you. Option number two, okay? Option number two is that you have more than one entry, okay? You have more than one entry. Let's say, for example, that as soon as you enter the trade, the market goes 20 or 30 pips the wrong way, okay? You enter again, all right? Now, once your original entry goes into profit, you move stop loss to above your entries. You can even close your worst entry. Now, what does that mean? What does close your worst entry mean? Okay, let's say that this is price. Okay, this is price here, and it's moving up and all the rest of it. Okay, now let's say, for the sake of argument, you originally entered the market here. Okay, the market then dropped down to here. As the market rises back up past your first entry, you can close it because that's the worst entry. It's a buy. You want the market to go up. This entry is much better. Why? Because it's lower. So you leave this entry running and you move your stop loss to above that entry, because then even if price decides to come back down, then you will be taken out of the trade at this point. You won't lose anything. I want you guys to understand the priority and the focus in trading is to protect your capital. Okay, very, very important. Your goal is to protect your capital. Trading is not about how much you make, it is what you avoid losing. Okay, and those of you who are experienced, you will come to appreciate and understand that in time. Okay, so let me just remove these ones because they are now irrelevant. And let's continue and talk about option number 2, 3, and 4. Okay, because these things are very, very important to your journey and how you're going to progress moving forward. Okay, so let me just get rid of that. So option number 2, like I said, more than one entry. If the market goes 20 to 30 pips against you, you can enter again, which would be here. As price goes up, you close your worst entry and you move stop loss above break even, okay, which is here in this scenario. Then you can let the trade mature and continue. Okay, now the pros of this is that you diversify your entries, okay? You diversify your entries and you can fill the entire entry zone, okay? The entire entry zone. What is the entry zone? The entry zone is this here, these numbers. Okay, I don't know what happened there. 4180. The entry zone is these numbers here. This is a zone, okay? Because there are a number of dollars between this price. So this is a zone here. So you want to be able to take advantage of that zone, which is option number 2, okay? Now, one of the other pros is that you can have multiple entries, which means that you can go for multiple TPs. Remember, if you only have one entry and you have set TP1, then your trade will automatically close at TP1 and you are out of that trade. Okay, now the cons of this strategy. Number 1, it may mean higher risk, okay, because you have more lots in the trade. Now, bear in mind, if you are taking the option of multiple entries, then you need to consider your lot size, because if you use the same lot size twice, say 0.1 and then another 0.1, if that trade goes to stop loss, you will lose more money, okay? If that trade goes to stop loss, you will lose more money because you now have 0.2 in the trade. So you can then take a decision that if you are going to go with the option of multiple entries, then you reduce your original order size. Now, the reality is nobody knows when we enter the trade if it is going to go straight into profit or if it is going to come into negative first. So nobody can tell you that definitively one option is going to give you a certain outcome because nobody knows the future. You cannot predict what the gold market is going to do, okay? We can do our best and we can give signals that are very accurate, but what nobody can tell you is whether the trade is going to fill the entire zone before it goes into profit or not, okay? Now, another one of the cons is it involves lots of management, okay? You need to be watching when the trade goes into profit. You need to make a decision. Are you going to close your worst entry? Are you going to keep it running? Are you going to move stop loss above break even? Many, many things, okay? So for the more experienced, you can look at option number 2, okay? For the more experienced, you can look at option number 2 as an option that you can decide that you want to undertake, okay? Now, with regards to option number 3, this is going to be for individuals that have a lot of experience, okay? So option number 3 is that you are doing full-blown layering, okay? Layering is when you have multiple entries throughout the zone, okay? Maybe 3 or 4. So you are entering multiple times. You are practicing strict risk management to ensure that you do not blow your account if the trade goes against you, okay? Now, the pros of this is that you can have a very good diversity in your entries, okay? So you're really diversifying your entries. It means that you can go for multiple take profits as well. So you can go for 3 or 4 take profits. However, the cons are that it involves more risk, okay? Because you're entering the market more. It involves more entries, which is ultimately going to be involving significant management, okay? So in option number 3 as a scenario, you are going to be managing these trades constantly, okay? And this is for the individuals, option number 3, that are extremely experienced. You know, they're probably able to give their full attention to trades while they're playing out, and they have done this before. This is not their first time. They have done this multiple times. They've been in this group 3 months, 6 months, 1 year, whatever the case may be. Now, just to reiterate, okay, if you are new and you have little experience, option number 1 is something to consider. I'm not telling you categorically to do it or not to do it. And I have clearly outlined the pros and the cons of each scenario. Okay, now here's what the feedback would be, rightly so, from the new people. Okay, rightly so from the new people. They will say that when discussing one entry, okay, when the update says plus 30 pips from best entry, and this is really important. When the update says plus 30 pips from best entry, move your stop loss ahead of your entry. The new people who are only using one entry, they will say, and rightly so, my entry is barely in profit, okay? Which means I cannot move my stop loss above, because the minute I do, I will be taken out at break even, okay? Type a 1 in the chat box if you have ever felt like this, okay? I can see, no one else can see. So this is what the people that are taking out option number 1 will rightly say. They will rightly and fairly say, my entry is barely in profit. I can't move my stop loss above, because the minute I do, I will be taken out at break even. Here's my advice. If you are just going for option number 1, okay, ignore all updates regarding break even for the entire month. Why? Because statistically speaking, you will still make profit. Okay, statistically speaking, you will still make profit. Now, again, I want to put a disclaimer. You must take this with a logical approach. Okay, what I mean by that is if the trade is 25 pips in profit, you know, and it is 3 pips from TP1, and you are watching, okay, close it. Don't be a hero and try and make it go to TP1. It's not worth it, okay? You've got 20 to 25 pips in the bank. A further 3 pips is not going to change your journey. Now, if you are not watching it, then it's totally okay, because then you wouldn't have seen the update anyway, okay? So if you're setting one entry, then you're going into the office, you're not seeing anything anyway. The next time you come back to your phone, it's going to be stop loss, it's going to be TP1, no problem, okay? So you can ignore all the updates regarding break even. However, take the logical approach. You know, if you are 20 to 25 pips in profit and you're staring at your phone, watching it, just close the trade, okay? Don't be a hero and go for the extra 3 pips. It's not going to do anything for you, okay? So these are the 3 options that all have pros and cons, okay? There is no perfect approach. This is the financial markets. This is trading, okay? Now, the reason that we promote moving your stop loss ahead of entry is to protect your capital at all times. However, the ultimate decision is with you. So what we are doing is being 100% transparent and letting you know this is where our worst entry is. This is where our best entry is. This is where our stop loss is, so that you guys know definitively whether we are still in the trade or not, whether we are out the trade, which will help the experienced amongst you know how you can manage that trade. Okay, so these things are really, really important. You have 3 options. They all have pros, they all have cons, and you have to decide which is going to be best for you. Okay. Now, another thing that I really want you guys to understand is that we are not against you. We are with you. We write the statistics down because you have to write them down in order to measure your performance. But we are not focused on statistics. We are focused on the amount of money that you are making, because that is why we are here. We want everyone to be profitable, okay? And in order to do that, the first thing that we have to do is protect capital. It is very important. And that is why we utilize moving stop loss ahead of entry, okay? Because that is the best way to protect everyone's equity. It is to move stop loss ahead of entry. Now, let's take a look at this trade that played out in real time in the group on Friday. Okay, so this was the last signal of the week officially that was sent out. And I want you guys to see exactly how it played out in real time. Okay, so let's use the replay function and we can take a look at exactly what happened. Okay, so this was price before we actually entered the market. We sent a chart analysis which stipulated that we were going to be looking for a break above 41.80. Okay, so let's just press play on this. So this will move fast. So there you go. There was the break above 41.80. Okay, we entered at 41.80.50. And at around this time here, okay, so at around this time here, we said move stop loss above entry, okay, which would have meant that you moved your stop loss. Let me get rid of that. It would have meant that you moved your stop loss, which is here. Okay, delete. Delete paintbrush. I don't know why that's not moving. Horizontal line. Okay, that would help. So move your stop loss here, okay, above your entry. That is what you would have done in that scenario. Okay, so I'm going to change this line to red. You would have moved your stop loss from here, okay, up to here. That is what you would have done. Now we can see how this trade played out. And as you guys can see, it hit TP1, TP2, and TP3 literally in the space of a couple of minutes, okay? And it then took off and ended up hitting TP4 and eventually TP5, okay? Now, there may be some scenarios where the market doesn't play as nice as that. And often it won't. It will not just go straight to TP3, 4, and 5. It will play around because that's what price likes to do, okay? And in those scenarios, we will always let you know and identify where we are in the trade and what our best or worst entry is. But remember, if you are brand new and you are taking option number 1, then you need to take a decision to do that for the entire month. You cannot do it for 1 day, 2 days, 3 days, start changing your order sizes. You need to decide tonight, what is my lot size going to be? Is it going to be 0.01? Is it going to be 0.02? Whatever the case may be. The reason being is that for you to truly determine what the results are, you need to use a fixed lot size, okay? You cannot change it because what tends to happen is that, say, for example, someone starts with a 0.1. They experience an 80 pip stop loss, okay? Now they are minus $80. Then they will tell themselves, I got a bit scared and I'm now going to go down to 0.02. That means now that if they hit a 30 pip take profit 1, they're going to make $6. How many trades is it going to take for you to now go into profit at 0.02? It is going to take you around 15 trades, okay, to go back into profit. That is why you need to use a fixed lot size, okay? So if you want to use a 0.05, you must stick with that for the entire month. And this is why if you are brand new and you are less experienced, then you should not use multiple entries. Why? Because this is what tends to happen. And again, type a 1 in the chat box if you've ever experienced this. If you are new and you are trying to use multiple entries, here's what you're going to experience. All the winning trades, I only manage 1 entry because it goes to TP1 quick. All the losing trades, I had 3, 4, 5 entries. And therefore, and this is the crucial statement, okay, that you need to avoid yourself saying. Therefore, it takes me 10 winning trades to recover 1 stop loss. Type a 1 in the chat box if you have ever messaged support saying it takes me 10 winning trades to recover 1 stop loss, or something to that effect. Maybe 5, 6, 7 winning trades to recover 1 stop loss. Why? It is because you should be focusing on option 1. 1 entry, 1 TP, 1 stop loss, set and forget. If you do that with a fixed lot size, this is only going to work if you keep the same lot size. If you change your lot size, it is not going to work. Fixed lot size with option number 1. Statistically speaking, it is impossible that you will lose money copying these trades because of our statistics. These have not been determined from 1 month, okay? These have been determined from a much larger data source, okay? So if you take 1 entry and 1 TP and you set and forget, and you ignore the updates regarding break even, but you take a logical approach whereby if the trade is next to TP1, then you just close it anyway, you will make money. The reason that 90% of you are experiencing that you are not making money is that you are entering too many times without experience. Now, the reason you're entering too many times is not your fault, is because you're seeing these updates, okay? You're seeing the updates that stipulate 30 pips from best entry. Then you're experiencing this. My entry is barely in profit. I cannot move my stop loss to above break even. Okay, so I understand why you're doing it. You're not wrong. Okay, but hopefully as a result of the information that I have just shared, you will see for yourself why it does not make sense for you to take that approach. Okay, and why in fact you should take the approach of sticking to option number 1, which is what we spoke about, okay? Option number 1. So hopefully that is making sense to everyone. Now, moving on, let me just have a quick look in the chat box. Let's see what anyone has to say. Say, because I've been learning about instant market, the first trade, then flips to blue, and then So if you are, and again, this is a really good question, okay? Someone was asking about using different order sizes with regards to option number 2. Now, if you find yourself unsure as to what order sizes to use with multiple entries, the answer, go back to option number 1, okay? Because the reality of signals is that if you want to make consistent life impacting money, then you have to have a degree of independence, okay? A degree of independence, which means that you have to figure it out. What is best for you? What is your risk appetite? Okay, what are you comfortable with? What are you uncomfortable with? So if you are unsure, focus on option number 1. But remember, there's pros and cons of each. So don't get angry if a trade hits TP5 and you weren't in it. You still made money, okay? Remember, this is a long journey ahead. And if you stay consistent, then you will make money, okay? It's the reality. The statistics, they show this, okay? Now, moving on, I want to talk to you guys about one-click trading, okay? Now, one-click trading is something that you can do to be able to enter trades fast, because what majority of people do is they flip between the Telegram group back to MetaTrader 5, they click on trade, they're searching for gold. By the time they find it and click buy now, the trade can be somewhere completely different, okay? So if you have MetaTrader 5, then you can utilize one-click trading, okay? So someone asked the question again, and I'm just going to cover this because I do think it's important. Someone said, what must you do when the SL margin is bigger than TP1? Again, the risk to reward ratio and the size of the stop loss relative to take profit one is irrelevant. It means nothing. It is meaningless. Why? Because when you look at the data of all of the trades in a single month, you can clearly see that there is profit. And why are you here? What is your goal with Forex? It is to make money. It's not to be a risk to reward expert and look clever. Your goal is to make money. And that is exactly what we do with these signals. We are making money over the course of a week, over the course of a month, over the course of a quarter. Okay, so can anyone argue with these numbers that clearly state that if you only use TP1, even if you hit 18 stop losses, okay, you would have made 2,260 pips of profit, is the reality. So let's go back to one-click trading. If you click this button here, which you can find on MetaTrader 5, you will get these boxes that come up. Sell and buy on the homepage where gold is. And if you simply click them, you will enter the market immediately in one click. Okay. Now be careful because you don't want to have this up and you're entering trades by mistake. But this is a tip that will enable you to enter the market very, very quickly. Okay. It's called one-click trading. So on MetaTrader 5, you find this button in the top right-hand side. Now you will see buy and sell appear. And you click and you can see the price. You're entering for a buy or you're entering for a sell. Okay. Then once you are in the trade, you can then click on it and you can modify it. Okay, so this is an example. Yes, it's for another currency pair, but once you are in the trade, you then click on it and now you can input your stop loss and take profit to save time. Okay, to save time. That's what it will enable you to do. So I highly recommend these things to get quicker in entering your trades. Okay, so if we say buy now, then you can use one-click trading in order to enter the trades. Okay, now, if you focus on those things, in particular with understanding what is best for you, option number one, or option number two, or option number three, that is your first decision to make. Now, if you find that you have a million questions about option number two, then my advice is that you should be following option number one. Remember, there's pros and cons of each. So tomorrow is no use messaging saying James said this, James said that, or no. There are pros and cons. Nothing is perfect, and certainly not in the financial markets. This is a high risk space. Okay, this is not an ISA. This is high risk. Okay, very, very high risk. Now, someone else asked a question about securing partial profits. Okay, how do you secure partial profit? Very, very good question. Now, if you are using a 0.01, you cannot secure partial profit because 0.01 is the smallest order size possible. Okay, if you are using 0.02 or above, then at any moment you can secure partial profit by closing a portion of your trade. Okay, in this scenario, it's going to be 0.01 and you leave the remaining to run. Okay, so this is something that you can also take a decision to do. Whatever you do, you should do for every single trade so that you get the same result. Okay, you cannot, that you have to do, okay, manually. It is the only way. Someone said if trade option one twice a day, does that work full time? So someone mentioned something about working full time. Again, look, this is why we have different options, because you have to have time to put in. It's the reality. No business, no side hustle, no venture that you undertake is going to allow you to make money without putting time into it. It's the reality. I'm not here to sell you guys a dream. You need to be able to have time to go on your phone and follow the trades. That is the reality of copy and paste trading, just like with anything where your goal is to make money. Okay, now I know this looks crazy messy right now, everything that's on the screen, but hopefully you guys have been able to follow some of this information that we have covered. Okay, there's a lot of questions that have been asked in the chat box. The majority of them we have actually covered throughout the session. Okay, and I believe that if you guys follow this information, you take it on board and you decide out of the options which is the best for you, then you will be profitable. Okay, the statistics are there, the statistics are real. I've discussed everything surrounding break even, why we do it, what you can do as a new person. If you have less time, like I said, ignore the updates regarding break even for the entire month. Use a logical approach. If the trade is close to TP1 and you are watching it, then just close it manually. Okay, it is as simple as that. So I don't think there's too much else that I wanted to cover on this specific call. There are hundreds of things that we can go over, but the reality is there's only so much that we can do on each session. Okay, so we're looking forward to a good week ahead. We're looking forward to some profits. We're looking forward to December, and we're excited. Okay, there's a lot of opportunities. There's a lot of things that we're going to do moving forward. So hopefully you guys have understood the information that we've gone through, and I will see you guys next time.
Recording stopped.